The greenback has been hurting lately. The dollar index down for a fourth straight day, bringing its losses this month to 1.4%. So what challenges does the U.S. currency face in the new year? Let's bring in Nick Bennenbroek. He's the head of currency strategy at Wells Fargo. The Wells Fargo currency team, by the way, is a Bloomberg best. So that is why we have you in, Nick. When we talk about currencies, it's really a bifurcated world. You've got the big economies, the U.S., the U.K., the Eurozone, and Japan. It's kind of struggling. And then you've got the emerging markets and the commodity currency markets. For the next year, will the weak get weaker and the strong get stronger?
Well, broadly speaking, yes. I think certainly the core major currencies, the euro, the yen, and the pound, for example, although they might do okay at the start of the year because of this Federal Reserve, the quantitative easing policy that we have in place, when you look a little bit further out, when you look towards the end of 2011 and the fact that eventually US growth is going to pick up, and probably you're going to see US growth outperform those other countries, then I do think towards the end of 2011 we will see a comeback from the US dollar, and we'll see the dollar at stronger levels against the euro, the yen, and the pound than it is right now.
In the meantime, though, we're seeing currencies like the Swissy and the yen continue to attract a lot of bids because they are the safe haven plays.
That's true, and that's possibly one of the reasons why the dollar has held in, at least against some currencies as well. But certainly the Swiss franc looking very good right now in terms of still pretty solid growth at this point. And although they're not going to raise rates anytime soon, they've got zero inflation. They're certainly not talking about quantitative easing and even more foreign exchange intervention. Although there is some talk, it's not really probably a huge threat right at this point.
So it's more of a reflection of the uncertainty, the concerns swirling around the European sovereign debt crisis.
I think so. I mean, Japan and Switzerland are both gaining from that, as you say, that safe haven status. I think the other thing is the contrast between Switzerland and Europe being neighbours and right there beside each other. If you don't want to be in the euro, perhaps let's be in the Swiss franc instead. It's not a bad alternative at this point.
We keep hearing how a lot of Germans are pouring their money into Switzerland. Is that what's driving the Swissy?
I'm sure that's got something to do with it, for example. And I mean, when you look at the capital flows data, for example, for the Eurozone, you have certainly seen a significant slowing or even outflows in terms of those European types of bonds. And so I think that's probably got something to do with it.
Okay, we keep talking about how Portugal and Spain could be the next shoes to fall. What will be the trigger for that if and when it finally does happen?
Well, I think it's probably going to be a market dynamic in terms of just if we continue to see an elevation of bond yields. And we saw some of that before the Christmas period, for example. So I definitely think it'll be more an increase in volatility, a rise in the bond yields beyond the levels that they are now. However, we don't really expect that's necessarily going to happen. And although it's been a very messy process, for example, eventually we do think the European leaders will step up to the plate in terms of more policy measures, maybe increasing the size of the stabilisation fund. So the thing that would probably trigger Portugal or Spain would be if we don't see a policy reaction from the Europeans. But sometime during the first quarter, I do think we'll see further moves to try and calm these European debt markets.
From the European Central Bank?
Possibly from the European Central Bank. I mean, the main thing that they would probably do is to accelerate their bond purchases, which have done a little bit. But I'm more specifically thinking about the European leaders and increasing the size of the stabilisation fund with the IMF. The two together currently at 750 billion euros. Maybe that'll be put up closer towards, even as close as a trillion euros, for example.
So you don't think the survival of the euro is in question here?
No, certainly not at all. Again, personally, I don't believe that the survival of the euro is in question, nor do I see any of the countries that are in the euro leaving the euro at this point.
So there's that political will?
Yeah, I believe so. The survival of the euro is a separate question, though, from the strength of the euro. And again, it's going to depend on how smoothly and how quickly some of these policy measures are taken. But certainly the survival of the euro, in my opinion, not in question at all.
We're back with Nick Bennenbroek. He's the head of currency strategy over at Wells Fargo. And Nick, we were talking about the euro, the dollar, and some of the major currencies. Let's move on to the emerging markets and commodity currencies as well, where we've seen monetary policy at least start to normalize. China raising interest rates. Australia's been doing that, even though it did take a bit of a pause. With the U.S. economy, as you say, expected to gain strength later on in the new year, how will that affect these commodity currencies and these emerging markets?
Well, I think at least in the early stages of a stronger economy, that's probably going to be even the sweet spot as far as some of these currencies are concerned, because you're still probably not talking about a significant threat of higher US interest rates at that point. You're just really talking more about stronger growth. And that actually tends to help the currencies like the Australian dollar and the Canadian dollar, for example, and the emerging currencies. So at least in the early stages of stronger US recovery, I think that's going to be somewhat beneficial. And as you mentioned, we've already got rising interest rates in Australia and Brazil, for example, and Canada. So it's much more clear-cut, and the contrast between steady rates in the US and rising rates in these countries, I think, does mean that these currencies should do very well in 2011.
Currency wars. This was a phrase that we heard a lot of in 2010. Brazil making mention of that. Are we going to see more capital controls and intervention by governments?
I think foreign exchange intervention for sure, and I do believe we're seeing capital controls in Korea, for example.
Right.
In the last couple of days, we've seen the limits on derivatives, currency derivatives, reduced for both the foreign banks branches as well as the local banks, for example.
Are they having their desired effects?
Probably, well, maybe they're slowing the rate of appreciation. But again, when we look, for example, at the strength of capital inflows currently, both into countries like Brazil and Korea, very, very strong capital inflows. It's going to cause some lessening of foreign purchases of bonds and equities, for example. But at the end of the day, I don't think it's going to turn those inflows into outflows. And at the end of the day, we think those currencies are going to still keep rising.
So won't inflation be a problem eventually then?
I think it is it's a problem in a country like China already, for example, and that's a very heavily controlled currency, and that's why we might see that currency go up a little bit faster. But I think inflation is starting to be a problem. Brazil's another good case where you're starting to see a tick up of inflation, and that's why there's always a balancing act. I think the capital controls won't be particularly effective, and perhaps we'll also see some slightly more comfort with rising currencies as this inflation problem starts to rise.
Are we at a point where these emerging market currencies or commodity currencies are overvalued?
It's possibly the case, I would say richly valued at least, maybe not overvalued, but certainly in the case of Australia and Canada and even New Zealand, for example, very high levels historically, both Australia and Canada trading beyond parity today, for example.
Right.
Not quite such an issue, particularly with some of the Asian countries. Korea, I've mentioned, for example, well below the peak that we saw just prior to the crisis. The Indian rupee also well below the peak that we saw prior to the crisis as well. So I think for the emerging currencies, valuations are not as much of an issue, but certainly in the case of the commodity currencies, there is that sort of concern in the back of your mind.
What could be the trigger for a sell-off then?
I would say the trigger for a sell-off would be a renewed bout of global volatility. Maybe we see an escalation of the European debt market crisis, which, as we mentioned before the break, is not something that we're really looking for. We're hoping that that's going to calm down. I think the other thing that would be a trigger for a sell-off would be a sea change as far as US policy is concerned, and in particular we need to see rising US interest rates, the federal funds rate. We need to see a removal of the quantitative easing or the liquidity that's being created by the quantitative easing.
Right.
And that whole reversal of US policy, I think it's so far away that we don't really necessarily need to worry about it at this point.
Okay.
But if it did happen, that would be a huge trigger.
Okay, one final question here. What's the most crowded trade that will fall apart next year?
Well, I think perhaps the trade that's most at risk is the Swiss franc, and we talked about that also before the break. It's in the headlines right now. It's at record highs. Everyone's piling into the Swiss franc because of its safe status. So, I mean, not that we necessarily think it's going to fall apart, for example, but it's at risk from the sense of if we did see a resolution to the European debt crisis, that would lead to some loss of support there, and also that would cause broader global markets to be calmer and also lose safe haven support. So that is probably another expensive currency and one that if there was to be a change in the policy or even global dynamic would be, you could see very sharp exit.
Okay, sounds good. Thank you so much for your outlook.
Thank you.
Nick Bennenbroek of Wells Fargo. He's a currency strategist at the bank.